Hello everybody, Rick Malero here with his Capital Group. I'm here with a good friend and a business entrepreneur, Dennis Blitz, who's an expert in retirement investments. Today, I've got a very specific, it's a loaded question, so we're gonna have some fun.
Okay.
But when I look at my business, and over the years, a lot of people ask me how somebody as young as I am, what I've done to get to the level where I'm at, and I tell them that a lot of times, what I learned is if you spend the right time with the right people, you will excel a lot faster than learning everything by yourself. And so, but with that said, in my business, really the only real successes and failures that I get to learn from in most cases are from my own mistakes. Or maybe I have a couple of partners or mentors even that say, hey Rick, be careful. Like I just got this lawsuit for this and I didn't even realize that this was an exposure. So those are critical. Now for an investor out here who wants to get involved and he may be wanting to use his retirement account, one of the biggest questions that he may have is what don't I know? And you are perfectly qualified to answer this next question because since you are the custodian, you get to see the different customers, thousands of different customers, and all of them make different decisions. Some succeed, some fail, and you get to understand the story of why. So knowing what you know now after over 10 years in this industry, what would you tell your previous self 10 years back, if you could, to make yourself more successful in the real estate investments?
Isn't that a wonderful question? The topic is, I would love to say something new and something brilliant and something, revealing that no one's ever touched before. The truth of the matter is, everything I'm about to say, we've all heard. But it's worth repeating because, boy, I've watched it in real dollars. And the first one is, I have a maybe a little different view than somebody else might have because I'm always dealing with retirement dollars. And retirement dollars have a special place. Number one, they're retirement dollars. Let's be a little cautious with them.
Right, great point.
Number two is their tax-free earnings. It's the most valuable thing you could possibly do. You can't invest more successfully than tax-free. People
Right.
forget what a tremendous partner, the Internal Revenue Service is. And we take that partner out of the equation with our IRA dollars. That's wonderful. And so the first thing is make sure the investments that you're doing, or think about this, make sure the investments you're doing with your IRA earn money. Now that sounds silly, but I can tell you there's a tremendous number of people who I've watched who've used their IRA dollars, that's that tax-free earnings, to invest in things that don't earn them money. Well, what doesn't earn money? Precious metal. Now, I'm not saying you shouldn't invest in precious metal. It's up to you whether you invest in gold and silver and precious metal. But don't do it with your IRA dollars. What should I do with my IRA dollars is those things that earn money because that's tax-free earnings. If you are a gold nut, fine, be a gold person, but do it with your non-qualified dollars, the dollars that you have in your pocket, because you're not going to pay income tax because it doesn't earn money. You may sell it at a profit at some point in the future, may not. Use the IRA for the things that earn money. So that's the first thing I always talk about. The second thing I watch, and you talk about who makes money and who doesn't make money, again, it's old news. It's invest in what you know and understand. Every time I see people go off the farm, go away from what they know and understand, not every time, but an awful lot of times, it's a mistake. I have a very, very, very successful client. The IRA Club has a very successful client, and he buys farmland and in the Midwest and in Illinois and Indiana. His IRA is loaded with farmland, and it makes a good return. He grew up on a farm. He was a farmer. He understands that project. I'm not telling you that if I bought farmland, it would probably end up as a parking lot, in the middle of a cornfield. I'm not a farm person. So, and understand it. We have a very successful client who has a Christmas tree farm in their IRA. Now you say, well, he can't be active. Well, he's not active. He owns the land. The land has the Christmas trees. He hires out a company that comes in once a year and plants seedlings. He hires another company that comes in once a year and harvests the trees, puts them on the truck and drives them into Chicago to sell them at Christmas time. So he isn't active, but he is managing that process, and you are allowed to manage your investment. So investment you don't understand. If you know and understand real estate, buying houses, collecting rent, that's what you should do. Don't don't invest in the gem mine in Africa, which I've seen people do, and you just say, oh my golly, what's
Unreal.
So it's do what we know and what we understand, where you're comfortable. And the next thing is don't shoot for the moon. This is your retirement account. I have people call us all the time who tell me they're going to make this investment for X and it's going to turn out in 10 years to be 100X. Well, maybe it will, but probably it won't. I hate to use the phrase risk equals reward because it really doesn't.
No.
Risk is greater than reward. Risk goes up exponentially, and risk is real, and people can lose money. One of the problems with being an American is we're so positive about everything. Everything will always grow. All those things that went wrong happened to the other guy and not to me. Risk is real, and not with your retirement money. So we want people to invest in what they know. Don't shoot for the moon. Work with professionals all the way along the line. You're going to be better off. One last thing I want to talk about, which comes up more and more lately as the population is maturing, is required minimum distributions. It's a big issue because you know that if you have a traditional IRA or a SEP IRA or a 401k, you're going to reach an age and you're going to have to start taking that money out. Age 70 and a half right now. It may be increased to age 73, but they've been talking about that for a while. So
It'll be a while before that changes.
Right now we're at 70 and a half. And so at 70 and a half, you're going to start taking your required minimum distribution because the Internal Revenue Service says, hey, look, we didn't collect money for taxes when you made the contribution. We didn't collect money for taxes as it grew. If there's a point, then we do want to collect our taxes. And remember, this is a retirement account. It was not an estate planning tool, so start using it for your retirement. 70 and a half is when you have to start using it. What we see is, and people become very upset about this because they don't want to, have to pay income tax. They don't want to take the money out if they don't need it and then pay income tax on it. But the fact of the matter is, if you've made good, solid investments, it's perfectly okay. Let's say you've made an investment that pays 8%, okay? And the investment or 6%. The required minimum distribution at age 70 and a half is only 3.6%. So in other words, you take your required minimum distribution that you're obligated to take, and your account at the end of the year is still worth more than it was when you began.
Right, that's smart.
And it will continue to do that for several years. So solid investments for people who are beginning to get to that point of required minimum distributions is a very, very good idea. The bad idea is to just sit with it in that money market fund because I don't want to lose anything, but then it'll eventually go down to next to nothing or nothing.
Yeah, because then you're drawing on the principal, no longer the earnings.
Because there weren't any earnings.
And let's be honest, the other loss too is inflation.
Mm-hmm.
If you're making 1% even, you're actually losing potentially 2% a year because of inflation costs. So by the time you actually do take it out, the cost of that money actually has dwindled the value of your capital.
Absolutely.
And so that's something most people don't realize. I really appreciate this information. This is really valuable. And a lot of times when we talk about giving people sound information to help them, it's not the sexy things that make you rich.
Yeah, that's right.
It's the boring investment part.
Yeah.
That's what keeps you wealthy. And so hopefully you guys get that value that, it's great to be excited to do real estate. It's great to make a profit, but you need to have core fundamentals. And that's what checks you. That's what guides you. And then in the end, if you're a good, prudent investor, like you said, you understand the investments you're getting into. You have the right team helping you with it. And you're being smart about the way you do business. Then you mitigate the risk and you capitalize on the profits, and then you're in a great position.
Wonderful.
I have one good friend, and I'll leave it with this testimony, who, when she started with a retirement account. And really smart. I mean, it's nothing luxurious. It wasn't anything sexier or great returns. But what she started doing was putting some money in her retirement account, putting some money in savings, and then little by little, she was finding ways of reducing her living cost because she had a plan that was for 10 years. And if she did this for 10 years, she had the mathematical equation down, she'd be able to reinvest this and get it to a point where then she was going to make a passive income of $6,000 a month. Well, guess what? In 10 years, she achieved that goal. So now she doesn't have to work. every month $6,000 comes in from her smart decisions. And so if you really take a look at it, a lot of people that are even watching today, they want to be successful, they want to become millionaires in real estate, and that's all great. But really think about what is the difference between wanting to become a millionaire or wanting to become financially free. And that person may not have the sexiest investments or the greatest stories, but every month they don't have to work for the money. The money's working for them. And so if you're an investor, understand that the number one rule is make the right decisions so that your money's working for you so that you don't have to.
Wonderful. I agree 100%.
Awesome. Thank you guys so much, and I really appreciate you being here with us today.
Thanks for having me.
Thank you.